And we're back for our fourth webinar. Thank you, everyone, for joining us today. We want to apologize for last week. I know we had some technical difficulties, but that webinar will be posted on our YouTube channel at some point in the future. We're just trying to work out a couple glitches, so thanks for bearing with us. So let me just tell you a little bit about us. We're the Patel Wealth Management Group at National Bank Financial. Our team was essentially started in 1981 by my father, Sheikh Patel. He used to be a stockbroker and, has gone all the way through the realms and has gone from stockbroker to financial advisor and more recently portfolio manager. So we've gone from our practice has gone from that end to now wealth management, and we try to do everything that we can that has a dollar sign except for accounting. A little bit about myself. I'm Sheehan Patel, and I'm the Associate Investment Advisor on the Patel Wealth Management team. And my contact information, so you all know, is 905-849-3549 and sheehan.patel@nbc.ca if you have any questions at all. So without a further ado, let's introduce Paul Robin, commercial financing for real estate here at National Bank. And I'm going to turn it over to Paul. And thank you for joining us today, Paul. So hello.
Hello. Thanks for hosting me today, Sheen. I appreciate the opportunity to talk about real estate. I'm a senior manager of commercial real estate banking for National Bank. I've been with the bank about going on 9 years now. And specifically in my role, I basically take care of investment real estate, so income producing properties, construction, and multi-res type properties. And that's primarily my area of focus.
And so, Paul, when you say real estate, are you talking all of Canada? Are you focusing on Ontario? I know I'm a Hamilton guy, and we work together in the Hamilton area. Maybe touch on your area.
Sure. So in our group covers Canada-wide. We have teams in Calgary, Vancouver, Montreal, and here in Toronto. I specifically cover the Ontario marketplace. So from Ottawa to Hamilton to Windsor. So I generally cover transactions at 10 million and up, and the group connections of 20 million and up. So again, I guess key types of transactions or asset classes we look at. You can break it down in terms of office real estate, industrial real estate, retail, commercial retail real estate, land development, and also multi-res development.
Thanks, Paul. I know we have another guy on our team that we use, Phil Bertrand. He does multi-unit residential. Paul and him work pretty closely together. But let's get to the next the question here. How long have you been doing commercial real estate financing in the sector that you're doing it in?
I would say as in terms of career-wise, I've been handling it for I guess about 16 years now. Going on. I've been in banking for 30 plus years. So if you take residential real estate into account, like individual mortgages, then you could say I go back 30 years. So so I've been well grounded in banking with 30 plus years experience and seeing the whole gambit and being through a few recessions and seeing what the toll on real estate could be through a recession, for example.
Oh, right on. Yeah, 30 years is a long time. Just it's a long time.
Yeah, don't remind me.
I think I was born 30 years ago. Okay. So, I want you to answer, like, so nowadays, like, what are some of the bigger deals that you've been working on? Don't say any names of any projects, maybe just, just the size, because you said residential, so that means you're probably working on $1,000 mortgages 30 years ago. Now you're working on.
Right now, I guess the biggest transaction I'm working on right now would be the multi-res transactions, CMHC insured multi-res. So doing a lot of multi-res construction. So basically the CMHC programs for multi-res, you've got your standard program and you got your affordability program. So there's two special programs that CMHC offers to ensure construction risk. Multi-res is a very hot asset class right now, and also for the demand for housing is an issue. So it opened up the marketplace, and it takes away the risk from construction from developers when they insure their risk through CMHC. So right now we're seeing a lot of opportunity in that area. I've been looking at projects across Ontario, several in Ottawa, on the GTA, and as well in the London marketplace. So it's definitely booming, and it's partly driven by the fact that the demand for housing is very strong and continues to be strong.
Yeah, definitely have seen that here in the Hamilton area. There seems there's tons of developments, cranes everywhere. Even in London, actually, we were out in London last weekend, and there's a couple cranes going up there now. So it's kind of nice to see. That actually kind of is a good leeway into our next question here. What, in your perspective and from what you do, what is the real estate market looking like? I mean, especially with COVID and everything like that. Let's touch on commercial versus industrial versus residential type of thing here for
Sure.
our viewers.
Okay, so I think commercial is still a very hot asset class. There's still a lot of activity in the real estate market. The one thing with real estate, it's a tangible. You can see it, you can touch it. So it's an investment that people are comfortable with. Real estate is also, you got a limited amount of land. So when you buy a property, the potential for it going up and over the long term is very high. It's a safe investment to make, because again, most people understand it because a lot of people own their own home and all that, so they have a general understanding of how real estate works. In terms of reviewing each asset class, I think I'll go with the riskiest. So I'll say land, for example, is probably the riskiest because it's not income producing. It sits there. The only way it really attributes value is if you change the zoning criteria, for example, increase value in that sense. A lot of banks will have a limited appetite in terms of land simply because it's an asset that just sits there. You either have to develop it and to develop it to its highest intended use to maximize your value, so to speak. In terms of commercial retail assets, even since COVID, I'd say that's even a riskier proposition. Based on the pandemic, a lot more people are staying home, a lot less spending going on. You're seeing a lot of retailers are going bankrupt. So you're going to see a lot of vacancies in plazas and strip malls as it relates to retail, whether it's hospitality, restaurants, stores that sell clothing, for example. You're seeing, since COVID, you're seeing behaviors change and more people moving to online shopping or getting more accustomed to online shopping. That was always something that was going to happen trend-wise. It's just with COVID, it's kind of accelerated everything in terms of technology and the way people do their shopping and that. So retail is I say, is very high risk right now. And that make a segue to industrial. Industrial is becoming a very hot asset class, and that's driven partly because of online shopping and building warehousing close proximity to their customer base when they order online. So you're seeing a lot more activity on industrial. In the GTA, you can't build it fast enough. I mean, as soon as you start building industrial, it's usually fully tenanted before it's completed. So industrial is a very hot asset class right now. And again, I think that's becoming an even hotter asset class because of COVID and people migrating to online shopping. You're going to see more and more demand for warehousing and also close proximity to the customer base.
I got to admit, I shop a lot on Amazon, so I understand that trend. I mean, I don't know if it's a good or bad thing. We still support local, but there's definitely that trend is definitely happening.
It's definitely happening. I'd say it's accelerating and faster. The trend was always there, but I think it's happening at a much faster pace now because of COVID. Next asset class I'm going to talk about is office. So office is kind of mixed because you have a lot of people that are working from home now. So you're whether that people come back after the pandemic's over, you may see more and more people deciding what they want to work from home, or in some companies deciding, you know what, we don't need to spend this much on rent. We can reduce our floor space because we don't need everybody in an office environment. So you're going to see a change in the way work culture works. But on the flip side, because of social distancing and all that, that's probably going to be something that's going to be ongoing. So you're going to see a need for more space to accommodate larger spacing and accommodating the social distancing within an office space. So you might see a net effect of zero there in terms of one, you may have more and more people working from home go forward, but also you're going to see more and more space required to accommodate social distancing in the workplace and until this virus pandemic is over. So that could be a change for a while. So I think office is kind of a unique situation. There will still be a demand for it. How that demand or how that plays out in the future, it will be interesting to see.
That's a very interesting perspective.
Yeah.
I didn't even think about that. The social distancing within the office place.
Yeah.
Yeah, it makes sense. You're going to need more office space if you have people socially distanced 6 feet apart. Wow.
Exactly. So I mean, the open environment will probably be here to stay with us in terms of office, but I think because of the social distancing requirement, the footprint's going to be much spread out. You won't be able to intensify the number of people on a single floor space like you did pre-pandemic. So it'll be interesting to see how that shapes out. The next asset class, talk about multi-res. Multi-res is a very hot asset class right now. Again, because of the need for housing. They can't build it fast enough. Vacancy rates are super low in major urban markets. So the demand for housing is huge, and affordable housing. So with CMHC's affordability program providing insurance to build affordable programs, that allows developers to take on the risk of building projects and mitigating the risk, and also being able to leverage more through the program. So you're going to start seeing more and more development on the multi-res side just to accommodate that need. And then residential housing, I think they kind of multi-res and residential housing are one and the same in terms of demand. There's always going to be a demand for housing because of the level of immigration. Even though that's kind of dropped off a bit, we're still playing catch up. I think once immigration starts opening up again, that demand will always be there, because the timing to get a residential project approved, especially in a major urban center like Toronto or Hamilton, you're going to see the timing for approval could be range between anywhere from 6 to 8 years from buying the raw land to actually being shovel ready on a project. So the timing to get a project approved takes a long time, which means it just builds up the demand over time, especially when you have immigration in the country growing from from 300,000. The plans for the government to boost it to 500,000 a year. And I think that will come back after the pandemic. You'll start seeing the immigration levels rise again, because that's part of what drives our Canadian economy is the level of immigration that comes in. And I think that will continue go forward.
Yeah, do you have can you comment on the green belt as well? The green belt in Ontario is getting fatter and fatter, if you will, I guess. And right. And there's a guy that I also work with, and he says the dome is, getting smaller, like where you can build is getting smaller and smaller. So is that a good, would you say that is another reason why real estate prices will go up?
I think it will go up because people want to be close to this major urban centers. Now, saying that, now with the COVID-19, that may change everything. Because with COVID-19, I just talked to some personal bankers. They're seeing a huge influx for requests for financing for cottages and second. So you're seeing more and more people starting to move out from the center. So the Greenbelt pre-pandemic would probably would have had a much bigger impact on prices, because it limits the amount of development you can do close to the core of the city or the GTA.
Yeah.
But now with the pandemic, it's because people can work from home and all that, behaviors are changing. For example, I just bought a house a couple weeks ago, and I bought Nelson because I can work from home more often. There's no issue moving further away from the city, and I think you're seeing that behavior happen more. And I think Hamilton will also be a big benefit of this pandemic, in the sense of, because people can work from home more often, they're going to start looking not so much living in the downtown core of Toronto. They may move to Hamilton and then only have to commute to work maybe once a week or once every 2 weeks, because the companies are now accommodating the work from home. because of the pandemic environment.
Yeah, totally. I know that on my street where we used to live, there was like 5 houses up for sale. They all sold within a couple days, and I believe they're all young families, and they're all coming from Toronto. So maybe that's the way of the future here in Hamilton. We'll have some. It's affordable. It's more affordable than living downtown in a condo.
Yeah, I think so. I think it's good for Ontario as well, because you're going to start seeing smaller towns becoming more people moving out, smaller towns so they can work remotely more often. So like cities like Belleville, for example, or Kingston, all that, they may see more traffic. So like, hey, if I can work from home all the time, why do I need to live in the major center? I can move to a smaller town and have quality of life. So you're going to see that change, I think, and I think that change will be over the next couple of years. I think it'll be a while before you start seeing people being comfortable living in a crowded city and being close to it and working in an office environment per se. So I think you're going to, in terms of the greenbelt question, I think pre-pandemic, yeah, I think it had probably a bigger impact, but I think post-pandemic, probably not so much.
Interesting. Yeah. So let's just move along here and get to the kind of the next question. Let's talk really specifically about kind of your job and what your ideal client looks like. Reason I want to say that, there's a couple mortgage brokers on the line that are probably listening in to, how can they work with you and with us. So let's talk about your ideal client at the bank, and then we're going to move into kind of the bank's competitive advantages in this space versus other institutions. And we're not going to use any names from other institutions, just ours. All right?
Sounds good.
On you, Paul.
Okay. Basically, the approach I take from a client, when I look at a client, I basically refer to as a 4M analysis. So the 4Ms are money, market, material, and management. So those are the 4 boxes or pillars, if you will, I look at when I'm evaluating a new client coming onto the bank. Management being the most important one. Does the customer have the experience of managing real estate? Does the client have the background? Has he held real estate before? Or is this a new venture to him? Does he understand the risk of managing an investment portfolio of real estate? Does he, like, in terms of managing the risk, does he understand what to do with what type of tenants to attract to your property, for example? Maintaining the property, does he understand his maintenance requirements? Because part of owning a property is you have to maintain it. So does he understand the important systems like HVAC systems? If you have an elevator, for example, maintaining the elevator and the regulatory requirements, the safety requirements, and managing that aspect. So management is very important. So I'd say that's one of the key. In terms of money, do they have the assets behind them? Can they? Do they have the resources? Like if the tenants, say for example, COVID, like several tenants ask for deferrals or can't afford to pay the rent, do they have the resources to rely on to cover the shortfall? And then, so money is probably another important factor in terms of resources that they can fall back on. Market is in terms of where the asset's located. Is the property in a good neighborhood? Is the demand for that type of asset pretty high? For example, is he buying a strip plaza or is he buying an industrial building? Two different types of real estate assets and 2 different types of risks. Like for example, industrial, you have very low vacancy on industrial properties, huge demand for industrial properties. Whereas retail, you're dealing with vacancy issues, quality of tenants, and also with post-COVID, you may not have, for example, independent restaurants may struggle and they may not last. So in terms of market, we look at that, and then in terms of material, material being the quality of the asset. How old is the building you're buying, for example? Is it a building that's for an industrial warehouse? Are you getting a building that's less than 10 years old, high ceiling, for example? Or is it an industrial building that's 40 years old and the low ceiling where there's less demand for? So we kind of look at that, and also the quality of in terms of the material. When I say material, I mean referring to the building. Is there environmental issues? Is there Has it been upkeep, for example, or do you have to do a lot of replacement, like on major systems, like the HVAC system, or maybe the elevator is very old, you need to replace that. So those would be the 4 fundamental things I would look at when I look at a client, and you can take that approach on pretty much anything when it comes to lending, but I apply that form analysis to evaluating a real estate client, if you will.
Cool. Cool. That's really informative. I'm sure the people on the line, if you have any questions, there's a little button there, Q&A button. Type them in. We'll answer them right on the line here. So that being said, you did mention one thing, market, and like where that is. So where does the bank see the hottest markets in Ontario right now?
I'd say GTA is probably a good market. Hamilton obviously is a good market. London, Ottawa. Major urban centers. Generally, we look at anything with 500,000 or more people. That's where there's a lot more activity in the marketplace. So I think major urban markets is generally where we focus on. So those would be the key areas. In terms of smaller markets, we would have to evaluate the risk on its own merit. For example, if you're looking to say buy, let's say, an office building in North Bay, for example. We'd probably take a much more conservative approach on an asset in a small town such as North Bay. But we would also look at what is the tenant mix of that office building. For example, is it medical, which tend to be stickier tenants, or is it a mix of independent businesses? We probably take a dimmer view on something of that nature, simply because the risk profile is higher. Whereas we take a better profile if it's an office where you have government tenant, for example, or medical tenant. We would probably be more receptive in a smaller market, for example. In a major urban market where, take Toronto for sake of argument, where offices has traditionally very low vacancy as well. We probably have better appetite for something in the Toronto marketplace versus a smaller market.
Yeah,
does that make sense?
Yeah, no, totally does. You're probably not going to have an appetite to, build in, say, like Dunnville.
Yeah.
There's not a lot of people there, so
yeah.
It makes sense completely. Let's just chat about, because there's other people on the line here. Let's talk about the competitive advantages of working with us at National Bank versus some of the other institutions. Some of the deals that you won lately, and what has been kind of the deciding factor that you think that people should know about.
I think with National Bank, the thing I like about National Bank is we're very entrepreneurial. We're very a flat organization. So like I have direct access to credit. So when I review a deal, I can talk directly to credit on a transaction. The approval process the approval process is much more slimmed down than other organizations, I find. You have direct access to the account manager. We tend to be fairly quick on turnarounds, and we're staffed with very competent people. Like most of my colleagues have many years experience in the real estate field. So you've got a nimble team, but you also have a very competent and experienced team that have a very strong background on real estate transactions. So I'd say that's one of probably the key advantages of working with National Bank.
Awesome. I don't know. Do you think we could touch on loan to value or rates, or do you think that's more of a call that we would make while discussing with the clients directly?
I think that's probably a case by case scenario.
Okay.
I'd say that would be transaction specific. So each transaction is weighed on its own merit. So that would determine LTV or loan to value, and what rate we would charge, because there's a whole bunch of factors when we look on it case by case. We evaluate the risk of the individual transaction, which drives the pricing, and then also the quality of the asset itself would drive what LTV we'd be comfortable with.
Great. Okay. Well, I want to just ask one more question, and this is, I think, the best one. And this is the reason I know what your answer is going to be already, because I work with you, and I think you're amazing. What would you say to the people that are on the line, the biggest benefit of working with you specifically? I know you said $10 million at one point, but let's just make it clear. Any deal we'll look at, and it may not just be Paul doing, right? So But when it comes to those types of deals that we're talking about, $5 to $10 million and more, when you're working with Paul, why do people want to work with you? What's the benefit with working with you versus your competitors?
I think the biggest network is we're a very collaborative organization, National Bank.
But I mean you, like you.
Me. Oh, me, okay. I'm gonna say I'm very reactive. I've got many years of experience in banking. I have a fairly solid understanding of real estate. I don't candy coat things. I'm very transparent with the transaction. So I tend not to steer people along. If I feel there's things that are risk, I'll bring them up. I'm not pushing to do the deal. I like to establish myself as a trusted advisor to my customers. So you may present me a transaction, and I may tell you the merits of the transaction, but I also tell you if I feel there's risk in the transaction that you may have overlooked or haven't seen, and I'll point those out that maybe this isn't the best transaction, and you may want to consider. So and I look at that not only as a risk to the bank, but it's also you as a risk of a customer. So I generally take the trusted advisor approach when I'm dealing with a client. I'm not looking to push to get the dollars or get the deal done. I'm looking to make sure that the customer experience is a good one, and that we're both winning on the transaction.
That's really cool. Trusted advisor. That's kind of what we are with our clients. I think that's why you and I align very well together, and Schick as well. So I just want to thank you for today. I really appreciate the insight you gave us and all the information. I know that there are people on the line today. If you have any questions or want us to look at anything for you, we're available directly. You can email me again at sheehan.patel@nbc.ca, and I will connect you with Paul directly. And yeah, so I look forward to working with you all and with Paul on some of the transactions. Paul?
Thanks for your time today. I really appreciate the opportunity to talk about real estate and talk about myself. So thanks again for the opportunity. And if you have any questions, feel free to direct them through Sheen, and I'll be gladly to help out. So thanks again for your time today.